Hello and welcome to Asia Gaming Brief's face-to-face series. Today I'm talking with Ruchir Desai. He's a fund manager with Asia Frontier Capital. And as we get towards the end of the year, we're going to be looking at the region and the tourism industry from an investor's perspective. We're going to be focusing in particular on some of the frontier markets and the reopening of international tourism. Thanks very much for joining us today, Ruchir. We wanted, as we came to the end of what's been quite another difficult year, just to take a look from an investment perspective as to what's been going on around Asia, and in particular in some of the more emerging frontier markets, which is your speciality. So do we still have bargains out there? Is recovery underway? What's the general impression?
Well, actually, if you look at what's happened in Asia over the past year, in terms of stock market performance, at least it's been kind of a mixed bag. Asian frontier markets actually have done exceedingly well so far this year. Some of them are commodity exporters like Mongolia and Kazakhstan. They completely outperformed the market. In fact, Mongolia has been the best performing market globally this year. And also you have the other markets which are structurally strong stories like Bangladesh and Vietnam, which have also done very well, also amongst the best performing markets globally this year. And then on the other side, probably you have some of the markets which have not done so well, for example, some of the ASEAN markets like Thailand, Indonesia, Philippines, and also China has not done so well. So it's been pretty mixed, but overall, I would say it's broadly been a strong recovery across especially Asian frontier markets in terms of economic recovery, in terms of exports, and also in terms of the industrial production, in terms of those economic metrics. They've all bounced back pretty strongly.
Which would be your top three markets?
But actually, if you look at probably not just into 2022, I would say more longer term with a 3 to 5 year approach, I would probably pick Bangladesh, Uzbekistan, and Vietnam as my top three picks, just because their fundamentals are very strong. They went into the pandemic on a very strong, macroeconomic position in terms of just the debt levels, overall debt levels for the country, and also they're coming out much stronger. For example, exports for Bangladesh and Vietnam are growing very strongly. GDP growth will be more than 6% next year. They have a large young population with rising income levels, and also Uzbekistan again went into the pandemic on a very strong footing, coming out on a strong way as well. Will do 6% plus GDP growth. Very strong reform story over here. They're just doing much more reform than many other probably countries globally.
Okay, obviously from our perspective, we're quite focused on the tourism industry, so I'd be very interested to get your perspective in how you see the tourism recovery unfolding.
Actually, in some markets in our universe, it's already unfolding quite strongly. So, of course, Cambodia also is part of a universe, but at the same time, we have also Maldives and Sri Lanka as part of the universe. And if you look at Maldives, in fact, Maldives has been open to tourists since July 2020. And as a result of the vaccination picking up probably globally, especially Western Europe, the US, and also within Maldives, they've seen a very strong recovery in tourist arrivals. In fact, over the last couple of months, they've almost gone back to pre-pandemic levels. And now we're entering the peak season for Maldives in terms of the tourist season, which runs up to April 2022. So I think those numbers will only increase going forward because some of the hotel companies that we speak to, they've basically have a full house or very strong bookings going into the next 3 or 4 months. And even Sri Lanka, starting off from very low base, they had a pretty serious outbreak of COVID earlier this year, but even their vaccination rates are very high. Now, almost 65% of the total population is fully vaccinated with 2 jabs. And they've seen a slight pickup in tourist arrivals, not very high, but they're doing strong numbers for the month of November. And I think if you give them some time as we enter the peak season, you'll see those numbers pick up as well. So I would say Maldives and Sri Lanka should continue to see a strong rebound in tourism going into next year.
You have some tourism stocks in Vietnam in your fund, is that right?
That's right. So the story in Vietnam, of course, it was a very important market in the ASEAN region for international tourism pre-COVID. Of course, post-COVID, they've had pretty strict lockdown and they've been very strict with international arrivals. And the country itself had a pretty serious outbreak earlier this summer, which kind of locked down many major cities for a couple of months. And obviously that hurt just in general domestic travel across the country. But now even Vietnam is seeing a very fast pace of vaccinations. In fact, I would say almost 60% of the adult population is fully vaccinated, and they want to vaccinate a majority of the population by early next year, which is good for just in general opening up the economy. And already the economy has kind of generally opened up to travel again in terms of flights and domestic flights, etc. So, keeping that in mind and keep seeing the potential earnings recovery for some of the domestic tourism companies which are listed on the stock exchange in Vietnam. We focused on, we recently bought for our fund two companies which focus particularly on, I would say, domestic tourism.
And how important is this reopening to international tourism for the developing market economies?
Actually, it's actually very important, especially for countries like Maldives and Sri Lanka, which are so dependent on the tourism industry, especially Maldives, which is, I would say, majority of the GDP pre-COVID was dependent on the tourism sector. And even Sri Lanka, they were, I think 5 or 6% of the GDP was being generated by the tourism sector, which was getting them, foreign exchange inflows of about $5 billion a year. And it's especially critical for them now, given the macro situation they are in terms of their weaker macroeconomic situation compared to other countries in terms of their foreign exchange reserves and their upcoming prepayments for the external liabilities. So if they can restart the sector over the next, say, 6 to 9 months, that would really help them, not just help the tourism sector, but I would say help the entire country, because it will really help them build up their foreign exchange reserves over the next, say, a couple of quarters. And even for some of the other markets like Vietnam, tourism is important sector. Is and was an important sector for the economy, but it is not that much dependent on the tourism sector, because they have also other parts of the economy which has helped them over the past 12 to 18 months during the pandemic in terms of manufacturing, in terms of other services as well as exports. So it's important for Vietnam, but I would say for the other markets like, say, Maldives, Sri Lanka, and Cambodia, it's critical that this year reopening over the, say, next 12 months or so.
Okay, of course, the big elephant in the room is that it appears that China has given no sign whatsoever yet that it's prepared to back away from its zero COVID policy. So how are these resorts and countries going to cope without the Chinese tourism spend? Because that was a very big part of most of Asian jurisdictions' tourism before the pandemic.
Yes, you're right. I mean, Chinese tourists were a very important source market for, I would say, a large part of the tourism industry globally, especially in Asia, in this part of the world, in the ASEAN markets. So yes, I mean, countries like Cambodia, Thailand, Vietnam, which were very dependent on Chinese tourists pre-pandemic, would probably face a slow recovery compared to some of the other markets, because they were so dependent on the Chinese market. But at least if they reopen it'll give them some momentum in terms of getting their industry restarted. But yes, the recovery which one would expect if China would be open, that would not be there in the event that China keeps the border closed, say, over the next 12 months or so. But for the other markets, say, for example, Maldives and Sri Lanka, China was an important market, but the tourism sector in these countries was more diversified from a tourist arrival perspective. So Maldives and Sri Lanka, they get a large part of the tourists from Western Europe, especially the UK, Germany, also Russia, and also some countries like Kazakhstan as well, and also India. India is a very important source market for both Maldives and Sri Lanka.
On the macro level, another topic that's been in the headlines a lot lately, of course, is rising inflation. Do you see that as a concern in any of the Asian jurisdictions in terms of we've hit the tipping point where it's going to start affecting consumer spending?
Well, I mean, from a tourism industry perspective, for the countries which are focused on tourism or depend on tourism, the inflation which is occurring, say, for example, in Sri Lanka, the numbers are just out, which are pretty high for the month of October, about 8%. That would affect more from the domestic consumption point of view. But these countries don't really depend so much on historically have not depended so much on the domestic tourists for their tourism sector. It's more the international tourists who come and actually spend the US dollars in their country. So I would say it's more dependent as to how the macroeconomic situation is in, say, in the UK or the US or Western Europe or Russia, which really has an impact on the tourism sector in some of these markets.
Right. I think we're seeing high inflation in European markets too, are we not?
True, that's a good point. But at the same time, I think given the fact that many people have not really had a chance to travel and they can make advanced bookings at the same time, I think the pricing for the resorts as well, or the hotels, Sri Lanka and Maldives, is not as high as it was in pre-pandemic levels, because even they want to fill up their occupancies and increase their occupancies. So at least they can at least break even then, instead of having losses. So at the same time, though inflation picks up, say North America or Europe, you are getting probably better deals in some of the resorts in Maldives and Sri Lanka compared to, say, 2018 and 2019.
Does that go for Vietnam as well? Or is this a more general trend where resorts have not managed to get their pricing power back yet?
Yeah, I think in Vietnam, I mean, I think given the fact that they're just coming out of a pretty strict lockdown, international tourism has still not really picked up over there, because the border controls are still pretty strict. So they're looking to start, some pilot programs in terms of getting some small number of international tourists into the country, I think in the next couple of months, especially from the first quarter of next year.
Great. Thank you very much, Ruchir. That's absolutely great.
Thank you. Very nice talking to you, and thanks for having me.
Thank you for joining us today. Please join us every Friday for Asia Gaming Briefs face-to-face series with thought leaders in Asia's gaming industry.